Okay guys, welcome back to my channel again, and here on this place I want to be showing you a quick analysis on gold. And this is actually New York session Friday after the release of NFP. So this is 4 hours and we have this particular place here, this other block here guys. See, and price has been rejected from this particular other block here. So now this is what we'll do. We go back to the lower time frame in the particular zone where we have our point of interest, which is this OB. So I'm on 15 minutes here, and on 15 minutes this is what I'm seeing guys. Just watch out. So this is it here. Okay, this is the BOS to the last point here. So we broke structure upward on 15 minutes here, and this is a liquidity here. Look at this equal lows here. I'm marking out every liquidity and everything I can see. So we have this liquidity here, equal lows, very strong type of liquidity. And let me go back to 5 minutes. Now this particular place is the highest point in the market, so let's check out if we have any shift in structure downwards in 5 minutes. Okay, 5 minutes is not very clear. Let me take it to the 1 minute. So we know that this is our point of interest at the other block here. So let's go back to 1 minute. Okay, now 1 minute we have a shift in structure guys. This is a shift in structure, but it's not really a clear one. This is not a low. It's not a low because just a two stick formation here. So let me view. This is not. Take this out. This is not a low. So let's wait for price to break this particular point here. Now this is what I see that is making me feel reluctant on this particular trade here. See, just like the one we saw in the 15 minutes, equal highs. So this is the liquidity guys. It's looking really suspicious. So you can only start selling from here because this is the liquidity price has not run into. So let's say we want to see price run into this liquidity and come back, giving us a proper shift here. Let me take this out, sorry guys. So we want to see price run into this liquidity and come back, giving us a proper shift here. Then we can enter this particular trade. So but for now we are not trading this place because we have equal highs here and we have liquidity will be above there. So I'm not falling for it. So I just want to wait for this to happen now and we are good to enter. To check 5 minutes, this is what it looks like here. Retrace above here, take out liquidity and continue dropping. So let's watch how this thing goes. I'll be coming back later on to see if there's any progress. Alright guys, we are back to this particular analysis, and before I could come back, everything has been done already. Like market have already finished performing. Like look at the 15 minutes here when I had my first liquidity. This was where I was targeting here, my first take profit. These two equal lows. Then let me just quickly go back to this zone where I had as my POI and I was able to pick that zone. In the 4 hour time frame, just how I started the video, I said that I was looking at price from this angle here to be rejected by this other block, and it swept liquidity above this other block. That was the first thing I noticed. So I went back to 15 minutes and I saw these lows here, these double lows, which serve as a good point of liquidity which price was going to come and take. This whole place here was a liquidity zone, and I was just looking at it here so that I would see if price will, you know, I knew that price was going to come and take out this liquidity here. So I had this place here as my first take profit, guys. Then this is an imbalance here. So if you check at 2 hours, so this is what 2 hours look like here. 2 hours, we have this imbalance here. Let me trace it down so that you can see how it looks like. So this particular imbalance here, so that's it, guys. So we've seen this particular imbalance here. So we have this imbalance here in 2 hours. Let me zoom it in so you can see it clearly, guys. So that FVG here was also filled in the 2 hours. So but my target was just this low here, this place. So this is the imbalance, guys. So this imbalance got filled and price rejected from this imbalance. So let me take you back to 1 minute and how this trade happened in the 1 minute. So in the 1 minute, let me zoom in. So here is the 1 minute here. So we are at this our zone here, our level in the order block, inside the order block here. This is inside the order block. I want you to notice something inside my point of interest. So let me zoom in again. Inside my point of interest, I have here to be my high, which I was expecting price to, trade above here. I was expecting price to trade above here from the previous video I did, like trade above here to take out this liquidity here on the 1 minute. This is a double top, equal highs here, so it was a attractive point. So I wanted price to take out this liquidity instead, like trade above here and sell. I explained it, guys. So trade above here and sell. Then when I break this particular low, I know that I have a shift in market structure. Then I come back to any point here of the retracement here, then enter down. So that was the whole thing I was anticipating. I already stated in the video earlier on. So this was what price did instead. Now let me explain. That's why if you're also trading, it's also good to look at price from all time frame as you're doing your analysis. But when you want to, when you're in a live trade, you should also do well to focus on the 1 minute so that you can always get the nearest movement or the closest signal. So this is what happened here. In 1 minute, if you're familiar with ICT concept, you know what is called a breaker block. This was supposed to be a breaker block, but it did not really break above here. But this was what price did. Price, came here. Let me make it clear. See this last candlestick here. This last candlestick, guys, that closed here. So this last candlestick that closed here serves as a breaker block, or you can call it a mitigation block. But this price did not really break above this zone. So that's why it's not, I cannot really say it's a breaker block, but this is what a breaker blocks look like. So when you have a last candlestick close here and price come back to that zone to retest. So this is what happens. So price closed here, then it built a liquidity here also. So people that entered around this point here maybe got stopped out a little bit. So if you look at it here, guys, you'll see that, look at this particular zone here. See how price constructed liquidity, and of course price is supposed to really trade above all this place with this high, also taking down or taking out all this liquidity. But since like the momentum in the market was so much that price couldn't push further to take out liquidity, and it broke down from here. So it couldn't take out this liquidity, but it just like cleared this high. If you look at it in the 5 minutes here, let me So on the 5 minute, price took out all this liquidity here, and after it retraced into this imbalance here, price also went further to take out liquidity. Now let me quickly show you something on the 15 minute. All the time frame here, I have something to tell you about this particular move, guys. So look at the 15 minutes here. This is what we have here. Okay, we have another block here. We have another block here. So price retraced back into the other block and it started selling massively, guys. Where did it sell to? First of all, look at it here. Look at it here. So five from the 15 minutes, you see that price came in and tapped into this my imbalance here, this line of my imbalance here, and it's rejected a little, then pushed down, giving you a break of structure, guys. So that is it for gold. And now if you look further, what's price trying to do? Price is trying to fill up this gap up to 50%, this liquidity void up to 50%, before we can start selling continuously. So that's just it. So that is how I was able to analyze trade. So guys, this is more like a top down analysis. And one thing you should know, that you have the probability of getting a good setup at the beginning of London session and at the beginning of New York session. So these are the two times you should come to, mostly dollar paired currency, to look out for a good setup. So looking out for this trade now, this will be my next level of point of interest, like my next point of interest here, this particular place here. So this is called a mitigation block. So price should come here and mitigate this particular block. So let me draw it out so you can see, guys. So maybe on Monday or Tuesday, price should just trade above this particular point, and don't forget that on the bigger time frame we are bearish because price broke structure here on the 1 hour here. Sorry, my chart looks somehow, but this is a break of structure here. So on the 30 minute, don't forget that we are still very bearish. So we want to see price come and mitigate this particular zone. This is a mitigation block here. It's even visible on the 30 minutes. Using ICT concept, you know that this is a mitigation block. So you want to see price fill up all this imbalance here, this liquidity void here, and from here it starts selling from this particular place. So that's just it on today's video. You guys saw how I was able to do the analysis right from the beginning of New York session around, I think that was 2 p.m. 2 p.m. So guys, this is where I will say goodbye for today and for the week. Please do well to subscribe and like, comment. Also, if you have questions related to ICT concepts, I can also help you guys. Please, let's take this channel to 100 subscribers. Please, any of you that come across the video should please do well to subscribe to my YouTube channel. So I'll be dropping more entry model. So today's entry model was using the order block and how to take entries from the order block. So maybe one of these days I will just do a video, but all the video I've been doing here so far is mostly on a live analysis. So one of these days I will still come back to the charts and still explain those other blocks that have high probability and the one you should avoid. So this is it here. Thank you for watching and God bless you.